Hi, and welcome back to my channel. Today we're going to be talking about the coronavirus and what this could mean for the stock market. But first, don't forget to like the video, subscribe to the channel, and comment down below what you'd like to see next. You may have heard in the news recently, but there's a new virus that's really affected much of the world now. Started in China. It's called the coronavirus. It's spread to the United States. There's cases now in Australia, cases in France. It's really terrifying, and it did hurt the stock market this past week. So as we can see, I am up just over $200 all time. If we go to the day here, up almost over half a percent. But when we go ahead and look at my stocks here from Friday, they all got hammered. When we're talking about real estate, ETFs, solar, Coca-Cola, Agilent, Microsoft, literally every single one of my stocks was down except Four Corners Property Trust. So we'll go ahead and talk about why that is right now. So I have this first article pulled up about why the coronavirus outbreak could trigger a stock market pullback. And really what they're talking about here is the overvaluation of the market more so than the coronavirus itself. So here they talk about the spread of the coronavirus really hurt the stock market on Friday. So as we can see, S&P 500 down almost a full percent. Dow Jones average down 5.58%. NASDAQ down again almost 1%. And they go ahead and point out here the stock market is still up 2% on the year and 1% away from its high on January 17th. This graph to me is not super useful. I'm not great at reading this, to be honest, but what they're saying is that there's a large difference between highs, really people that think there is a bull market and people that think there's a bear market. That being said, they did say that there is in general an increasing amount of people with a bullish view on the market. So as we can see here, 59.4% of Americans in this poll believed that there is a bull market. That being said, the American Association of Individual Investors survey saw its bullish percentage rise to 45.6. They go ahead and talk about that's the highest since October of 2018. And they talk a little bit here about why that is. But people are saying that, here we go, it might be time to take the offense temporarily off the field and move to a neutral position on stocks. This has a lot to do with the market and a lot to do with coronavirus. So he said that stocks sold off sharply in the final quarter of 2018. And as we very well know, in the beginning of 2019, we saw a lot of those gains come backwards. And this is what I find most interesting. They say we've seen outbreak panics in the past, and the resulting fear-based moves in the market have been buying opportunities, which I think could absolutely hold true. Something I've talked about on this channel before, and something that a lot of people I listen to have talked about. Just because there is a downturn in the market now doesn't mean it's time to sell. In fact, when it seems like time to sell, that's often the best time to buy. And the largest piece in the market, the largest thing to look out for is time in the market. Now, this second article is a little bit more gloomy on the future of the market. So here, Forbes says the global stock market's diagnosis on China coronavirus, sell. So they talk about how the coronavirus has basically shut down airports, shut down schools, people aren't going out, they're not spending money, they're not doing things, and that's really hurting valuations of multinational companies. Here we can see the virus has spawned 1,300 cases and led to 41 deaths worldwide. And again, this is a huge time for China, not only because it's the Chinese New Year, but it is the beginning of the fiscal year. And I think a lot of people have expectations for what should be going on right now, and certainly coronavirus has hurt that. So here they say, though global stock markets have a record of shaking off health scares, that didn't happen with many publicly traded China businesses listed in the U.S. on Friday. This is true. At the same time, almost everything got hammered on Friday. Everything I've read says that it has almost everything to do with coronavirus, and here they talk about the different companies that have struggled. So Trip.com, the country's largest online travel booking agency, fell almost 7% and have lost 18% of their value in the last week. This is a very clear correlation. People aren't going to travel to China. They're just not traveling as much in general because there are so many scares, and there are checkpoints at airports throughout the world because of these fears. Trip back Tunia fell 2.2% to $2.20, as we can see, down from $20 in 2015. Again, a fall that big is largely due to the company's poor performance, but certainly this did not help. China Eastern Airlines down 1.4%, and Huazhu lost 18% in the last week, including 2.5% on Friday. Now here's where it gets most interesting. These retail linked stocks were also under pressure. So Starbucks As a rival, here we go, Luckin plunged 8.6% on Friday, and Alibaba was down 2.5% on Friday alone. Now here is another interesting one. Yum China fell 1% on Friday, and Starbucks lost 1.8%. People are not going out to eat, not only in China but internationally. Whenever there's a panic like this, people tend to stay inside, which means they're not spending money, they're not being productive, and it's going to hurt the stock market. That being said, I do think that this is a short-term thing. As I talked about, in those 1,300 cases, only 41 deaths, so certainly not as terrifying as some of the outbreaks that we've seen in the past. The flu kills more people than that every year, so I'm not concerned in the slightest. Now I'll talk about Four Corners Property Trust because I did go ahead and buy one more share of this on Friday. So as we can see, equity is now up to $59.40 with an average cost of $29.23. This one hasn't been great for me, but it does pay a high dividend. That dividend did go up. It's up to 31 cents per share, which is awesome to see. Earnings have maintained themselves, been fairly consistent with this company. As we can see in October, dividend paid 29 cents, and here in January, paid 30.5 cents, so they rounded up to 31. In the 3 months, we can see that they've made a recovery. If we look in the last year, we can see that they've been all over the place. The last 5 years, we can zoom out. Since this became an ETF, since it became a REIT, it has grown very well, 162%. Not expecting any growth quite like that, but I do think it's a good value thing to have. And then, of course, Bitcoin. Throughout all of this happening, Bitcoin rallied. I think everything that I've read says that when things go wrong globally like this, when there is a health scare, Bitcoin is a great asset to have because a lot of its value relies on fear or really uncertainty in the markets. So as we can see, up almost $20 here on the day, still down $75 on that all time, but I am up roughly $200 all time now. So I'm not concerned about this at all. Keep talking about it with the cycle that Bitcoin's going through. I think the end of 2021 is going to be very telling, and I think now's a great time to buy with the average cost. So I am dollar cost averaging my way down to about 98.50 right now. Quantity 6.24% of one Bitcoin. Slowly getting there. As a college student, don't have a ton of money to invest in Bitcoin all the time, but it is something that I want to continue purchasing. Portfolio diversity, we can see, makes up about 15.5% of my portfolio. By far my largest holding. As we can see, cost $6.15, equity at $5.40. Now if we go back, we can see that SPHD, my largest holding of stocks and ETFs, is at $4.77. So I am slowly averaging my way up there, but Bitcoin is still my largest holding. So SPHD, I think, as I've talked about in the past, very good indicator because it's an ETF of the S&P 500 as a whole. So on the last week, it is down 1.5%, but that is very indicative of the stock market. Like I said, not super concerned. There has been a little bit of pullback, but nothing to be worried about there. Vivint Solar, I always like to talk about. It's been awesome for me. Down $10 on Friday alone, which is not good to see, but with that total return of 25%, I'm still very happy with that. If we go ahead and look at the last week, they've been down. In the last month, very good growth, starting to pull back a little bit. And of course, that 100% buy rating here on Robinhood is always a wonderful thing to see. And when we look in the last year, we can see that they have done excellent. I've talked about it a little bit in the past. I actually started buying way down here. The first shares that I bought last year were for $4.04. I bought Vivint Solar at $4.04. Clearly, looking back, should have bought more shares, but hindsight's 20/20, as I like to say. Then, of course, we'll talk about Microsoft. They had an interesting week, I would say, for sure. Still have $40 on this all time, up 33%. Very good to see. They have struggled, I think, in the last week or so. The question is how much of that is pullback and how much of that is them struggling. So as we can see over the past 3 months, excellent, and just starting to see this pullback now. Over the last year, even better, and 5 years is spectacular, up 250% in the last 5 years. Now, if we go ahead and look, still 91% buy rating here, and their earnings are coming out this week. This is going to be a vital earnings call for them. I know I seem to say that a lot, but I do pay attention to these earnings calls. I think they are important, certainly because of the PlayStation 5 coming out later this year. Microsoft is looking to counter that with their next generation Xbox console. I know that's not their largest portion of business, but certainly it could help or hurt them. I've talked about it in the past, but they have an increasing reliance on their cloud infrastructure, which seems to be doing excellent. They did win that Pentagon contract over Amazon, which is wonderful to see. And the last one that we'll go ahead and talk about today is Pfizer. Certainly a company that I've been buying more of in the past. Still down $3 on this all time. But as I've shown in the past, this is a company that struggled up 1% on the month, starting to slide a little bit downward now. On the last 3 months, up quite a bit. But on the last year, we can see with that earnings call there in July, they really did struggle, up as high as $43 and down here as low as $34. Should have bought more when it was lower. But again, really hard to know that. If we go ahead and zoom out to 5 years, we can see that they're making decent progress back upwards. Back here in 2018, it was up as high as $46. Everything I've said, or everything that I've read has said that Pfizer is definitely a good play in the long run. Robinhood has them at a 64% hold rating. So certainly I am a little bit hesitant to go ahead and buy Pfizer, but you never know. Now, when we look at earnings, again, they have earnings on the 28th coming up this week. Their earnings have been trending slightly downward, but they are consistent, and this does pay out a decent dividend. So here we can see in December, I got 36 cents per share from Pfizer, so definitely something that I want to look forward to. As I mentioned in every video, please like the video, let me know what you think, comment, subscribe, and I will be back with more content here next week. Thank you.